Good morning, Canberra, for Cam's Mortgage Minute on Thursday, September the 20th. Today we're going to switch gears a little bit and talk about the U.S. economy. We always talk about the Canadian economy, but we're going to look stateside and have a look at the U.S. economy. And it looks like the housing market there is finally starting to turn a bit. Americans bought previously owned homes at an annual rate of 4.82 million in August, a 7.8% surge from the previous month and the fastest pace in more than 2 years. According to the Washington-based National Association of Realtors. The median price was $187,000 US. That's almost a 10% from a year earlier. So that's at least positive news on that front. Distressed sales, which are typically occur at a discount, accounted for 22% of the overall sales, compared with 30% in August of 2011. However, some of this could be attributed to the fact that banks and lenders who own some of these houses are keeping them off the market. And that number, nobody quite knows what it's at because they don't want to flood the market all at once and have more of a distress on it. The other number that came out is that builders started working on new homes at an annual rate of about 750,000 in August. Better than the previous month and a 29% faster than a year ago. And home builder confidence overall was put at a 6-year high. So those are all definitely positive things. Typically when economies rebound from recession, they're typically propelled by building and buying of homes. Unfortunately, as we all know, in the U.S. economy, this hasn't occurred thus far, and that's what's caused a lot of the troubles there. And that's why the growth has been so halting, and it hasn't come along as quickly as it should have. And the housing market actually contributes to gross domestic product rather than contracts it. And it looks like finally the housing market is starting to add a little bit to it. Now, the other thing that was interesting that the U.S. economists noted as well is that globally, Europe is still struggling, so that note was still there. And China's growth, which has been in double digits for years, has actually basically slowed down to around 8% per year. An enviable amount compared to a lot of countries, but for China, certainly a slowdown. Housing starts at an annual rate of 750,000 would look meager. I mean, to us in Canada, we might think they're pretty large, but when you think about it, for instance, 1959 and onward, the U.S. has averaged about 1.5 million per year. And unemployment, unfortunately, there is still stuck at around 8%. So it's pretty tough to have people running out to buy homes when new jobs are only being created at about a pace of 100,000 jobs a year. So what does this all mean? Well, basically, the economists there feel that housing has carved out a bottom. And that's a massive positive that finally that they may be touching the ground bed of the seabed floor, and there's only hopefully one direction, and that's upward. But is momentum gathering? You know what? So hard to tell. There's been a lot of false starts there for quite some time. Again, just like I've said to you many times here time and time again, time will tell. There's no different story there. Only time is going to indicate whether this momentum is actually going to take hold, the bottom has been found, and if it's going upward. So what's the note that we should as Canadians take away from this? Well, when we're worried about our real estate market and how tough it is, all we have to do is look south of us, and you know what, quite honestly, we've got it pretty darn good. When we look at a lot of other parts of the world that are struggling, Canada has come out of this pretty unscathed. So you know what, if we encounter a few tough times, we're just going to have to work our way through it, but we can be very grateful that we're not faced with the sheer devastation that some of these other economies have encountered. Anyway, it's been Cam for Cam's Mortgage Minute, and I will see you tomorrow.